This is Alan Bush with the Daily Financial Forecast for Tuesday, February 16th. Now, starting out with the stock index futures, there's a lot going on, a lot of news that is affecting this market. We are seeing prices higher today, and this almost entirely due to news that Chinese loans in January increased to a record amount, and that caused Chinese equities to advance rather sharply, and then in turn stock indices gaining as well. So pretty much all the strength that we are seeing in the indices due to what is happening overseas. There was a little pressure that developed when the National Home Builders Index came in a bit on the weak side, coming in at 58. The guess was 60. Also, we had the Empire State Manufacturing Index coming in a bit on the weak side, but indices still holding up very well. Ultimately, we do believe that the interest rate environment globally that is likely to remain very supportive will be with us for quite some time. In fact, the central banks that are accommodative are likely to become even more accommodative, and that should help the indices later this year. Now, moving over to the currencies, the dollar index advancing, this due to the change in the probabilities of a rate increase from the Fed. It was just last Friday that the probability of a rate increase at the December meeting was at only 4%. Coming in today, the probability of a rate increase at that meeting is now 26%. So interest rate differentials supporting the dollar index in the overnight session and in the weekend trade. Also, we are seeing the euro currency coming under a little pressure. We did have some weak investor confidence numbers coming out of Germany. Also, we had Mario Draghi of the European Central Bank indicating that if there was additional financial turmoil, that the central bank of the Eurozone could come in with more accommodation. So that, from an interest rate differential point of view, pressuring the euro currency. Also, we are seeing the pound trading lower, even though we did have inflation numbers in the UK coming in stronger than it generally had been anticipated, and some gains in the Canadian dollar with factory orders in Canada coming in stronger than the median estimate. Now, moving over to the interest rate futures markets, some pressure developing, especially at the long end. This linked to higher U.S. equity prices. Also, we are seeing the back end under more pressure than the front end. Once again, we are still looking for no rate increase this year, even though the probability, as we mentioned earlier, is for somewhat of a better chance of a rate increase. Our feeling is that the Fed may not raise until 2017 if they can raise rates at all. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.